15 of 19 series are aligned with stagflation mild this morning. That is a strong broad-based confirmation across the 19 series macro framework. The current macro regime is stagflation mild, with a confirmation score of 19 out of 19. The macro regime means growth momentum is decelerating at -0.5858, while inflation momentum is accelerating at +0.0081, a configuration the engine classifies as subdued growth with persistent price pressure. The coherence score is 19/19ths, and the confirmation score is 19/19ths, indicating full alignment across all 19 series. Historically, regimes with this level of confirmation have persisted in 52% of comparable cases over 3-month periods. Compared to last week, the confirmation score is unchanged, while the growth and inflation composites remain in the same directional pattern. In markets, environments like this have historically felt uneven, with rate-sensitive assets, cyclicals, commodities, and defensives rotating quickly as investors reprice inflation and policy data. The 10-year Treasury yield is the first signal to watch. The current level sits near 4.45%, and the momentum label is red, defined as yield pressure moving up toward or above that level and holding for 5 consecutive sessions. In 9 of 11 comparable periods, that condition coincided with an acceleration in the inflation composite within the following session window. Labor is the second signal. Payroll breadth and claims remain under pressure, and the momentum label is red, defined as weaker labor readings versus the prior month and persistent claims pressure on the engine's scale. In 7 of 9 comparable periods, that labor pattern coincided with softer growth coherence within 1 to 2 months. Credit is the third signal. High-yield spreads remain under strain, and the momentum label is red, defined as spread widening and risk compensation rising relative to the prior read. In 8 of 11 comparable periods, that setup coincided with weaker equity breadth and more defensive factor leadership within 3 months. A fourth signal comes from commodities. WTI crude is lower overnight, which the engine treats as green, defined as easing price pressure after an earlier spike. In 6 of 10 comparable periods, that pattern coincided with temporary relief in rate volatility over the next several sessions, even while the broader regime stayed under stagflation pressure. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, the historical sample shows inflation composite acceleration in 9 of 11 similar instances. If the fear and greed index drops below 15 and holds for 5 consecutive sessions, confirmation deterioration appeared in 7 of 9 comparable instances. The map is live. These conditions are being monitored daily across all 19 series.